Given the various pieces of data we've seen this week, which have not all been great.
Right.
I think that's
That's a lovely kind way to say that. Mm-hmm.
What are you looking for today?
Without giving you the number.
Without giving us the number.
I'm expecting that we're going to have relatively healthy job gains in September. You know, we're not going to have as much of a hurricane effect as one might have had in previous years. Some of the stuff in GM is not necessarily going to have hit at this point. And while the data we got this week does increase the risk of downside to sort of the range, the consensus, and some of us may think,
right.
I'm sticking to the fact that the service economy and the labor market is going to remain healthy. So we still think that the risks of a recession are kind of overblown at this point, even with the weaker data we got this week. And so I don't want to sound too Pollyanna, but I'm going to try and stay a little optimistic about the print we're going to get this morning. What does the
University of Chicago think out there, Austan?
Well, look, I hope that's right. But I guess, Andrew, I got a little pit in my stomach. You know, and the market does too. I mean, you saw the reactions to some of the news. Right now, the strongest thing we got going for us is the consumer and the job market. And if either of those start to crack, I think we will be talking about a recession, and there's limited power for the Fed to respond. They got a short runway. The impact of monetary policy doesn't have the same bang for the buck it would have in normal times. So I'm a little nervous that we don't have a hurricane for the jobs numbers, but some kind of storm is brewing in Washington that is probably going to divert our attention.
Joe would say you're rooting for a recession, Austan.
No, I'm absolutely not. 100% the opposite. I hope that we get a good number today. Even if we get a good number, I still think the Fed is probably going to.
Let me see your fingers, Austan. Are they crossed? Are your fingers crossed behind your back?
I'm surprised he hasn't. He hasn't worked.
I'm going to cross them double, like Mr. Spock crossing here.
I'm surprised he hasn't worked the Ukraine into his answer.
It's Ukraine, not the Ukraine.
Not the Ukraine. That's risk.
Thank you very, very much. Where do you land? Do you think we got a recession coming?
No, I don't. I think I go a little bit deeper and look at something that's hard to measure, and that's the cost of regulations, which is a direct impact on employers' decision to hire. And those have continued to be held low by the Trump administration day in and day out. It doesn't make the headlines of the papers anymore because usually it's a tweet that's on the front pages. But I think that and the continued sort of tail effect of the tax cuts a year and a half ago will continue to allow the economy to expand, maybe not at the 3.5%, but the 2.5%, 3%. And so I think we'll see job growth in line with the average for this year.
Is there a real overhang from this trade war or not?
I think it creates uncertainty in the market. And then what you're seeing in the manufacturing side is people are adjusting their supply chains. And that can work both ways. So far, most of the consumer effect has been masked as companies like Walmart and others have absorbed the increased costs of the tariffs.
Right. Austan, I'll let you get political for a second here, which is, we were talking about this in maybe the 6 o'clock hour. Does the situation in Washington today make it more or less likely that the Chinese come to the table?
I don't think that, look, the Chinese are making the same gamble calculation that business is on its investment, which is, I think, let's sit back and see what happens in the election. I don't think they're inclined at all to come in and throw a lifeline to President Trump, if that's what you're asking.
No, I don't imagine that. The question is, does this, given all of the impeachment talk and everything else, and given all of the pressures that are on the Chinese, is President Xi saying, okay, I'm not buying soybeans, I'm not doing anything, I'm just going to watch, I'm getting my popcorn out and just watch this and do nothing?
Yeah, that's what I think he's doing. And think of it this way. If you were the Chinese and you went to the table and hot and heavy are going to try to negotiate an agreement, it's not clear that President Pence is going to even approve that agreement. And so I think you will wait.
Very clever. You want to weigh in? We got to go to a commercial.
I just wanted to go back to the sentiment thing here, which is the big question mark, I think, for a lot of risk assets. You know, if we have a deterioration in sentiment that's not just from impeachment and Brexit and the trade concerns, but also the slowdown in manufacturing and the industrial side, and if that really bleeds through to lots of different sectors instead of where it feels like it's isolated right now, then, that's going to be a big question around hiring and investment. And I think it ends up having this sort of sustaining downward pressure on the economy. Right now, it's not there, but we are at that precipice. And I think the more headlines we get, weaker headlines on the data like we had this week, plus if things get ugly next week in terms of the trade negotiations, I worry that everyone holds off on investing.
Okay, final word.
I think both the Chinese and the Trump administration have an incentive to come up with, I think of it as a light agreement. Don't accelerate the trade war, keep it steady, and that should have a slight positive effect on that sentiment.